Alright, good morning guys, good evening wherever you are. Welcome back. Another live stream here with the Everyday Growth Advisors. I hope you had a good weekend. Let's cover what's going on this week. Quite a big docket to cover. So I'm going to kind of go through everything really quickly. A couple of important things. We have continued earnings season this week, so we're going to be seeing a lot of continued earning, pressure in the market to kind of hold prices where they are. Of course, copper buyback for America is back, so that's also something that we'll be looking to kind of analyze as we head into this earnings season that's about to kind of drop. Now, on top of this, that additional buyback pressure is going to kind of add a little bit of cushion to the S&P 500 because a lot of these companies that are signaling these buybacks, they're likely to see some speculation ahead of their actual buyback. So if they announce it during the earnings call, that's when we want to kind of capture that momentum. So that'll be important. But the major catalyst for this week is going to be FOMC next week. What's going on, guys? Mark, Chiri, Santosh, welcome back. Thank you for tuning in. And yeah, let's get this on the road. So yes, next week on May 2nd and 3rd. So you have FOMC on 2nd of May. And then 3rd is the minutes from the previous meeting that will be posted. So next week you have a pretty big catalyst event there. 25 basis point is pretty much fully priced in. I have already included the full analysis on the newsletter. Hope you get a second to read that one. It took me a lot of time to write this week's one. More than often, it does take a lot of effort to write those newsletters because I do it from scratch, and it's a lot of things that I distill before I get to that spot. So I hope that you enjoy it, and you find some value in it. Excuse me. So yeah, we're seeing a little bit of pullback here on the S&P 500. Obviously, we're not going to go further. We're not going to go down in a straight line. So I expect a lot of choppiness here heading into this week. Remember, we have a lot of earnings coming out, so I expect a lot of down, up, down, up, down, up. But then eventually, coming down to retest the 4100 level, 4060 level. These are the two levels that we have to retest key. And you can see, as per our analysis on outflows in semiconductors and tech for the past 4 weeks on this live stream, we've been talking about the prime brokers and all of the trend followers kind of exiting this two sectors, technology and semiconductors, and now we are finally starting to see a little bit of weakness in there. This is the thing, you see, you wouldn't notice that the weakness is happening until you actually see the break below. And so this is how we develop the edge, right? You need to know it's happening before it's happening, and you can confirm your hypothesis when it's broken below, and you wait for the retests, and then that weakness that follows, that move down, is what you want to really capitalize on. So what is the difference between knowing and then doing it, and then not knowing and then waiting for the pivot point and then just going, right? The difference is you have the confidence to take the position, and you have conviction as to why it's happening, right? And that conviction and the confidence will not add additional pressure to you mentally, and it will keep your behavioral psychology in check in terms of how you're dealing with and managing the trade in terms of mental bandwidth. So that's the importance of why you should know what is going on and how it's going on, or why it's going on, before you actually take the trade, because that gives you a better understanding of, okay, now I understand why it's going on, right? Same thing's going on with tech here, right? So they have been seeing outflows for past couple of weeks already, and you can see it's kind of playing out in the Nasdaq. The Nasdaq's moving sideways here in kind of a distributive move. So a lot of this equilibrium here is a lot of FOMO on retail trading. So retail traders are buying the dip here, and then smart money is kind of waiting to short this into this little pocket right here. So there's a possibility that obviously we see Nasdaq have a little bit of a pullback heading into FOMC next week, and then earnings this week, depending on how these companies report earnings. There's going to be all kinds of catalysts, so it's going to be a pretty exciting week. Now, apart from that, let's see, not really much else. IWM, as I mentioned, the case for this one going bullish is still very, very dependent on the bond market and dependent on liquidity. So I'll give you guys more updates on this one when the time actually comes. As of right now, there's nothing to really update you guys on this specific sector of the market. Bitcoin has seen significant outflow because we just passed peak liquidity about a couple of weeks back, 2 weeks back or so. So that's something to also take note of. The VIX is down at 17 bucks. kind of showing you this low volatility environment. 19 was the previous, 21 was the previous. Remember, I say anything above 24, that's heading into a little bit of a volatile territory. So we've not really been able to sustain high levels of VIX here. The plumbing through the system by the Fed has worked. They restored confidence successfully to the economy, which is a good thing. And now they need to fix this inflation problem, and it's not going to fix that easy, right? So there will be a lot of ups and downs in inflation, and the bond market's likely to signal some of that deprive as well. So we'll see how that plays out during the FOMC meeting. My guess, if anything, is Powell's going to continue to signal hawkishness and possibly say that they're going to hike rates possibly for the next meeting and the meeting after as well. So it's really important that you understand that even though next week's meeting is touted to be the last hike, it all is going to depend on the sentiment of the chair and how he holds the press conference and the things that he says and how that signals to the market what is about to happen in the next couple of weeks. Okay, so really, really important stuff there. So bond market, not really much change here. I did mention last week there was a little bit of buying, which was a little bit of uncertainty heading into earnings. And now it looks like, we're just kind of hanging out, moving sideways here. So we'll see if if the 10-year yield continues to go up, that's going to put a lot of pressure on the valuation of stocks, which will send the S&P 500 down to some degree, right? And then you have the dollar index, which is weakening here this morning after failing to break out the 102.25 level. It looks like it's kind of going back to retest this 100.8 level or 100.77 level, and that's good for equity. So there's a mixed sentiment there heading right now into this week. This bullish bounce here, it could lead to another squeeze to the upside in a potential way. So be really careful. This is one of the reasons why I haven't gone short, super short yet. I've just taken beginning small positions on SPX and very, very minor positions. I have just 5 contracts left of this SPX puts that I bought. I'm not overloading the boat here, and I'm not trying to really create a very big risk allocation right now because there is no confirmation. I would rather do that when I have a confirmation. So yeah. Okay, so one of the trading opportunities for this trading session I'm watching is QCOM. Bullish bounce either here and a confirmation break above, let's say 120 or so, would give us the bounce to the upside. Bullish break below 116.50 and then break continued below 113 gives us this bearish extension. You could play obviously this scalp between 116 to 113 if you feel comfortable about that. But I would say wait for the break below 113 to really solidify a bearish position if you want to play the move all the way down into the 107 level. Semis have been pretty weak. And so I would say this is one of the unique opportunities that is exhibiting a potential opportunity to the downside in this trading session. Or maybe, let's just say, the next couple of trading sessions. So I'm just putting this on your radar so that you're aware of this. This is a nice little risk-to-reward ratio setup. The bullish trade here will yield you at least a 1:2 risk-to-reward ratio at the very least. In fact, maybe even a 1:3. And the bearish trade here will also yield you a pretty decent risk-reward ratio, at least a 1:2, 1:3. So I like the setup, pretty decent based on the risk-off objective. And just based on how you're going to allocate your risk, that's how the trade's going to play out. So make sure you don't go crazy on it. I'm just putting it in front of you. JP Morgan, has been kind of in a lull. Financials actually outperform majority of the S&P 500 in the past week. This has been pretty good. I did mention in the newsletter, just when SVB bullshit hit, that this is going to be overblown and the market's going to probably start pricing in all kinds of doomsday scenarios. And you guys saw that. It was a news cycle, right? The news was constantly saying, oh, we're going to die, everything's going to go to zero, right? And, it's just the same rhetoric that always goes around trying to cause panic. And what happened following the next weeks? The S&P 500 moved further and higher and squeezed everybody, right? So you need to understand these things. This is exactly how they do things. This is exactly whenever you're thinking the market is going to move in a specific direction, and it's very likely to do the opposite, okay? So you have to be aware of this, and we've been following all this to the T, right? So if you've been following this live stream, honestly, you've been following the journey and how we've been covering this entire scenario for the past couple of weeks. And at this point, if you don't, attend this regularly, I'm not really sure what you're actually doing, because, this really preps you up for a lot of different things. And it's not just that we talk about hardcore technical stuff here. We are also focusing on the structure of the market. I'm talking to you about prime brokerage movements. I'm talking to you about the flow of capital through the system. I'm talking about sector rotations. I'm talking about a variety of different things. All the tool sets that you need to succeed as a trader And so if you wanted to take that to the next level, obviously you would join the Discord and then be a part of our community and see what's up with the live trading sessions. But remember, I don't like to kind of tell you guys about that. I feel like if you find out more on your own, you'll be more incentivized to find that out, and you'll be more interested that way. But we do offer a free 14-day trial period, so if you want to see if you're a fit, then you can take that up in the link in the description. So another one that we're looking here is Disney. It failed to break further down, but you know what? If it does reject firmly here at around the $100 level, or maybe just a little higher here at 101, I might be happy to take a short position here on Disney temporarily. It does have earnings still coming up. Let's see, it is on May 10th, so about, what is it, 2 weeks? Yeah, 2 weeks from now. I think this will start to price in a little bit of downside movement in the next week, because look at how Netflix went, right? It did gap down pretty aggressively and then came all the way back up, but this has been trading kind of sluggish, and I think Netflix might trade sluggish for the next couple sessions as well. They had a very mixed earnings report. That mixed signal or that mixed sentiment might play out in Disney as well because of the expectations of Disney Plus and their streaming service. Tesla, if you're trading this right now, I highly recommend you to stop trading this right now. A big move down, big gap down. I know everybody's talking about this huge gap here. Retail traders are salivating at this right now. Everybody's looking at Tesla. Oh, there's a gap at 147. Oh, there's a gap at 155. Oh, there's a gap at 160. Oh, there's a gap at 161. The amount of times I hear retail traders say there's a gap, right? I could probably be really rich just if I were to collect money every time they said that. What's important is you understand that Tesla's narrative is temporarily suppressed, and it doesn't mean that it can't squeeze to the upside. So the very simple way to look at this, and I'm not trying to convince you not to trade this, but I'm just imploring you to think about this from the risk reward ratio objective. Okay, very simple. This is where you could go up to. This is where the gap is. This is where you are. The risk opportunity on both sides is equal. Therefore, this is a shit trade. Okay, it's really simple. Okay. Very, very simple. Downside and upside are roughly about the same distance away. Okay? Maybe downside a bit more favorable, right? So if that is the case and you're sitting in the middle, then you're making a boo-boo move if you're going to bet on this right here, right? Because it moves up, you lose. It moves down, you lose. Or it moves up, you win. It moves down, you win. So either way, you're trapped. It's a 50-50 coin flip. You might as well take your money, go to the casino, bet on Baccarat, go on banker like a couple of times. Maybe you win more money there, okay? Yes, it broke the pennant. Yes, it's come down here. Yes, it's bearish. Yes, I understand the bearish sentiment. Wait for the pullback. Wait for the pullback. See where demand comes in, where it pushes Tesla, and then you can make your decision. Stop trying to chase gap downs and push it further down. It's not going to work. Okay? I'm real with you guys. I always keep it real with you guys because I believe in, just keeping it as 100 as possible, because I don't want to see you guys lose money. Okay, and if you don't listen to my advice, you don't need to, because quite frankly I don't really care if you do. Most importantly, I'm putting out the information so that you can benefit from a different viewpoint. That is what is important, that you understand that there are different viewpoints. Okay, and your bias might be consuming you, so I like to put your bias on the table and examine it. If you don't do that, then you fall prey to confirmation bias, and that's going to be a big issue, right? So with Tesla, please avoid this right now. Wait till more confirmation comes in. You can play it later, okay? A little bit of bad news came in for China. I think there's a little bit of helter-skelter in the Chinese equity market. And we did see a quick little bounce on that, actually significantly this market close. BABA kind of trapped a lot of people on this move up. We played it perfectly. We exited. We didn't even bother to play the wave down. And I haven't even bothered to throw any money on this just yet. Because you know what? It's not really something that I want to play until I see another significant bounce. And then I can take that to the upside again, right? So I'll hang out and let this thing kind of do its own move here before I take anything on this. It's not necessary for me to chase this in any way. Pfizer, not much there. Charles Schwab, neither. CVS, this was a play prior. MasterCard has been on my radar for a while, but not really seeing anything significant here. Then you have mainly the big tech. Google has been just a disgusting chart to trade. Like this is just this is disgusting price action, right? Quick pops, quick drops, quick pops, quick drops, quick pops, quick drops. I hate this kind of price action. It's very, very stupid in my opinion. This is one of the top watches for me this week as well. Costco, right? Nice breakout. If it can consolidate above this 501 level, 502 level, I'm happy to possibly take a swing trade here, play this up into the 530 level and possibly into the 540 level at some point, right? So there's some significant upside here with some risk dynamics. We want to see the bounce first before we take this, obviously. If not, it's just going to squeeze back into the pennant or this wedge, and then you just have yourself a dud, right? So that's the style with this one. The key pivot to the upside is going to be 512. And if it squeezes back into this wedge, then the key pivot for the downside is going to be 489 roughly, and that'll bring us down into 466. So that's going to be your key levels here that you'll have to watch. Apart from that, honestly, I don't have really much for you guys. Apart from that, Amazon has been seeing a little bit of inflows. I think it reports earnings this week. Yep, it does. A lot of earnings, guys, this week. So keep a lid on things till you see the earnings. And then make your moves accordingly. Apple's been relatively quite stable with the market, so has Microsoft, but they're kind of both ranging and not really much of a thing to analyze with them just yet. Remember that tech is what has to lead the market. So if NASDAQ doesn't break, NASDAQ continues trading sideways, you continue not taking trades. Simple as that. When the NASDAQ breaks to the downside, you can short the S&P 500, you can short QQQ, you can short SPY, right? Until that happens, don't do anything stupid. Okay? Really simple guidelines, really simple plan. Don't do anything stupid until you see tech getting weaker and confirming our bias, confirming our hypothesis, and then you have the green light to do what you need to. Now, if you've enjoyed this live stream, I appreciate it if you could take a second out of your day to smash the like button so that this video can reach more people. There's 30 of you here, so I would really appreciate it if I could get 30 likes. But if you can't, you know what, you can't take a second out of your day to smash the like button for all the work that we do, then you know what, it is what it is. I'm not even going to be angry about it. But I would appreciate that, and I hope that you have a great trading session. I'm going to jump on the live stream now. If you have any questions, comments, concerns, charts, tickers you want me to go through, post them right now. I'm going to wait a minute. I'm going to see if you have any questions or anything like that, and then I'm going to jump off the stream. So go ahead, put your comments, questions, anything into the chat right now so I can get to it. NVDA. Okay. Yeah, so NVDA is another one that's been on our radar. We're going to short this one. We shorted it together on the Discord, right? So okay, so kind of a flat top wedge here forming on NVIDIA. Obviously, this is subjective. This is very subjective. You don't need to specifically believe that this is a flat top wedge. But yes, this looks like a really nice setup so far. We did manage to catch this right when it shorted here, and then it made a little move up, and then it came all the way back down. This is a nice little win for us, I think, last week. I think we played this, let me see here. Yeah, we closed some of the NVIDIA out, 265 puts for 59% last week. I took half the position off, I believe. I think I still have half the position running. Yes, I do. I still have half the position running right here. So I'll be continuing to hold that position into this week and adding exposure to a lower strike in the coming trading sessions. So I'll be looking to add that short exposure only if we kind of break below 267, and start getting into these low 264s. Break below. We kind of want to see this kind of a move, a breakdown. Oops, sorry. Let me make it thicker a little bit. That's medium. So we want to see a breakdown, a pullback, kind of a retest here, and then that's going to lead us to a really nice one. So I'm going to kind of wait for that to play out before I take my main position on NVIDIA. This was just a kind of a feeler trade because I knew they were squeezing shorts here for a second. This was too good to be true. I told you guys wasn't it the last live stream that I told you guys this? I was like, guys, be careful with NVIDIA. It's too good to be true. Didn't I say it? I'm pretty sure I said it, right? I know I said it on the live stream, on the live trading session on Discord. But somebody remind me, did I not tell you guys and warn you guys about this little peak down here? This screwed so many people because the next day it gapped up, and I guarantee you a lot of people sold their losses right here, and it eventually is going to fall back down there, and it's going to clear out all of those shorts. It's so funny to see that retail traders keep getting trapped into this. So Edward, the plan here is very simple. We want to see this firm break below 265, 263, let's say around this area here, and then wait for that retest level at around 268. See that demand coming in a little slower, and then if it forms this high here, rejects here, we can take some of that downside. I'll give you more insight on this trade on the Discord, and I'll post it when I take it. Actually, any comments on the new VIX ticker symbol? What is the new VIX ticker symbol? What is that? What? Tell me more about it. Does it affect anything to do with the VIX? I like learning new things, so let me know, Snappy. I want to learn. Ryan Thong, AMD. Okay, so I know AMD. Okay, so AMD has been flagged to me by multiple people now. Now, first of all, that worries me because a lot of people are looking at it. Second of all, I think that it is obviously a great opportunity for a potential both bullish and bearish trade here. Okay, this is a dual zone, so in other words, this is going to turn into a potential bounce zone for AMD. This is a 61.8 level 2, so this level's $85 here is going to be a very key level for AMD for a potential bounce. So I would honestly likely like to play this as a bounce at the 61.8 level if you can get confirmation that it's actually going to bounce here, and play this back up into, like, let's say 93 or 95 for that retest here. So it's likely to do one of these and then come up and then reject and then come back down again, right? So that's what I'm possibly seeing on AMD, because this looks like the wave up here is a 3-wave combo, right? It's an ABC wave, and it looks like that's ended. So then this would be the start of a bearish sequence, and if that's the bearish sequence start, then this might be the first wave down, and then the second wave down, and then the third wave will be the longest wave in the future, right? So that's kind of how you have to look at it. But this is on a daily chart, so I wouldn't really give it so much of weight, right? Just play it by the pivot. Okay, 85.43 is the key pivot. Don't take the short here, obviously. This is shitty risk reward ratio. You want to wait for the bounce at 85.43 or the break below. Simple as that. Okay, that's your key pivot. It's a 61.8 bounce level. Okay, anything of the trades today worth going long? I told you about it. Costco. I literally said Costco, right? Any of the picks you discussed going long? I mentioned it, Scotty. I said Costco is the one that I'm looking at, right? Costco is a bullish trade idea. And the banks have been pretty strong, so I might see if I want to continue taking exposure in banks, like financials, right? The other thing you need to understand is, obviously I'm not going to show this on the stream, but we have sector rotations, right? So one of the sectors that are has upside potential is consumer discretionary. That's something you need to notice, right? Consumer discretionary has got upside potential. This sector right here. And Amazon is one of them, and it's gapped up pre-market, right? Amazon has potential for 114 upside. So those are two that I'm watching for bullish trade ideas. No worries. Okay, Scotty, I got it. Okay, sorry about that. I thought you just didn't follow along. It's cool. Yeah. So the two trades that I'm looking at for bullish opportunities are going to be Costco, this one, and Amazon. Where is it? Amazon. Where'd it go? Oh, there it is. Right? These two. Boom and boom. Right? Bullish opportunities. For bearish, it's like there's a whole bunch of bearish ones, right? But the bearish ones, you have to be really careful. So read the newsletter for further guidance. The newsletter has already been sent out. I highly recommend you guys to read it. And then once you read it, you'll get a better understanding of where the vibe is. Where the market vibe is really important. So keep that in mind. And that'll be all. All right. Once again, you can join us for 14 days for free on Discord. I don't know why you wouldn't do that. Click the link in the description below. Sign up. Cancel the subscription right away, and you can join us for 14 days. Highly recommend you do that if you haven't yet. Take advantage of it. You can join the 5K challenge. We're continuing on that challenge this week. The 5K account is currently up about 10%. Not too bad from where we started it. It is currently at $567 profit for the year. Last week I took a little bit of a hit on it because I had some bad trades, but they were paid off by JP Morgan, so that's okay. So yeah, that's all I have for you guys today. I hope that you guys have a good trading session. Please don't do things that you're not supposed to, and yeah, keep it real, keep it 100. And I'm gonna jump on the Discord now to trade with the team. So I will catch you guys on Wednesday for another one. Take care, have fun, and peace out, guys. Love you all. Thank you very much for attending the stream, and please leave a like on the way out. Appreciate it. Bye bye.